I think gold is off to the races for what will be a multi-year rally like we saw last time, where it could be 3,000, 5,000, 10,000, whatever gold settles at. So there's not a whole lot of upside, I don't think, right now imminently for gold or silver because they're doing the same thing. But
Mm.
this is a very strong chart pattern and it points to much higher pricing down the road. They might not have a big correction this time around. Maybe we're going to see gold and silver hold up really well while the economy kind of falls apart, if it does fall apart, and then it just keeps going higher.
The post-election excitement extended for another day across financial markets as cryptos, stocks, and gold rallied higher, receiving an added boost from the Federal Reserve, which lowered interest rates by 25 basis points on Thursday afternoon. Gold has had an impressive year, outperforming many other assets over the last several months. Throughout 2024, the price of gold has consistently broken records and reached new all-time highs, primarily fueled by economic uncertainty, global instability, and investor interest, underscoring its allure as a reliable investment in turbulent times. On the eve of the U.S. presidential election, the price per ounce was sitting at $2,748, just shy of its recent peak, and up by over 33% year-to-date. ChrisVermeulen discusses the optimism among investors following Trump's return to the political scene, maintaining a bullish outlook on precious metals. While he sees a short-term buying opportunity in the market, he also believes that the music is coming to an end, with gold poised for another rally, potentially reaching levels of $3,000 to $5,000. Vermeulen emphasizes the importance of Fibonacci extensions as a powerful tool for identifying price targets and resistance levels, helping to guide expectations for future market movements. The latest data from the World Gold Council is mixed. The net result is a 5% increase in total Q3 volume demand compounded by higher prices. The value of demand growth topped 35%, driven by investment inflows that are expected to continue in 2025. Investment demand is driven by falling interest rates, providing a strong market tailwind. Vermeulen believes that the global trend of increasing investment in gold is a clear signal of growing concerns over geopolitical tensions and economic instability. He stresses that investor sentiment largely drives this shift, with many turning to physical metals as a safe haven. Fears of currency devaluation fuel this move over valued stocks and real estate, and the slowing economic momentum in the U.S. As a result, investors are seeking to protect their wealth by diversifying into precious metals like gold. Let's delve into the video to gain further insights. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
Obviously, investors are, I think, happy that Trump got in business-wise. Everybody's piled into the stock market. Small cap stocks rallied like 6% in the U.S., just showing that people just want to get back into the risky, the growth stocks. So that's good. But of course, if there's money flowing into the risky stocks, people want to pull money out of their kind of boring defensive safe haven plays like gold, and bonds fell really sharply as well. So obviously it's, with money's going in one direction, it's got to come from somewhere else. And that's what we saw, as you just mentioned. Gold took a pretty big hit the other day, and same with silver. But it really is just a news-driven move. It's a recalibration of people just shuffling their money around based on future expectations, feel of where we are in some major stages and cycles. So gold and commodities go through these massive, like 10, 15-year super cycles. We are currently in a fresh new one as of 2019. But the previous one started back over here in 2001, 2002. And what is really interesting is I love Fibonacci extensions. These are the most powerful tool to identify price targets and how much potential there is. And if we were to use a Fibonacci extension, this will tell us, based on the previous rally up to the 2011 highs and the 2015, 2016 lows here, it will tell us where those resistance levels are. So more or less, we had the rally up, the first major super cycle rally. We had a correction, a pullback. And then in 2019, we broke out of this base and we started another super cycle. And what I always follow with Fibonacci is if we hit this 618 level, so 61.8% of this initial rally, and we see the market pause and pull back, we almost always go up to hit the 100% measured move, which is what one is, 100%. And so this is that 2,750 level on the chart that I've been talking about for several years. And what's the key thing right now unfolding, which kind of ties all this in with the stock market, is we've had this pause, this multi-year pause. Well, we actually had a multi-year pause back over here
That's
during
correct. Yes.
mid 2000s. And during this pause in gold is when stocks skyrocketed, real estate took off. And then eventually things got close to an end, and we saw gold come out of nowhere and silver and rally. And that is what we're seeing now. During this pause that we've had over the last few years in gold, stocks have rallied, real estate, there's bubbles everywhere. But
Mm.
now gold has just come out blazing, pushing to new all-time highs again, just like it did back over here. And I like to look, Dave, as gold is like, look at planet Earth as like the beehive mentality. Everybody on Earth has the same mentality, and that's they buy gold when they think when there's war going on, there's uncertainties, there's bubbles everywhere, people start to move into gold. And that's what we're seeing. I think globally, a lot of people are uneasy. They're concerned about all kinds of stuff unfolding. And so this is a huge red flag that I believe we've hit that measured move. There might be some more upside potential in gold right now. But as you and I talked months ago, this is kind of where we are talking about the market's going to. And then from here, we probably see some multi-month pause and pullback while the stock market eventually resets. And then I think gold is off to the races for what will be a multi-year rally like we saw last time, where it could be 3,000, 5,000, 10,000, whatever gold settles at. So there's not a whole lot of upside, I don't think, right now, imminently for gold or silver because they're doing the same thing. But
Mm.
this is a very strong chart pattern, and it points to much higher pricing down the road. And tells us the sentiment of what most investors are doing. They're moving to physical metal because they're scared about the currencies. Currencies are all over the place. Stocks are overvalued. Real estate's overvalued. Momentum in the U.S. economy is starting to slow, and so people are moving here to get out of those systems and hold physical metal. And as you know, I'm a big fan of physical metal. I've got all kinds just sitting around me. I like to collect all types of different types of metals, but this is what people have been doing right now. And now we just have to let the markets kind of do their thing. I think they've hit that target that I've been looking for.
Silver could indeed outperform gold in 2025 under the right conditions, but for most investors, it's best viewed as a complement to gold rather than a replacement. According to a report by Value Research, while silver can offer strong short-term gains, it tends to be more volatile than gold. Over the past 5 years, silver's annual returns have ranged from a low of -2% to a high of 21%, while gold has maintained a more stable return range between 7% and 19%. This higher volatility suggests that silver might carry more risk but also greater potential rewards in certain market conditions. Vermeulen believes that silver and gold are more likely to pause and pull back rather than undergo a significant correction. While he believes gold and silver have made the easy upward moves, the next challenge will be whether they can break through these resistance levels and push even higher. Although Vermeulen doesn't foresee an immediate surge in prices for silver or gold, he expects that silver could eventually reach $800 an ounce, surpassing its 2011 highs in the future. Now let's redirect our attention to a video.
Silver is doing a lot of the same of what gold has done. It started a big rally. It went into a multi-year pause back in 2006, 2007. People piled into silver as a defensive safe play. 2008 crisis hit. Once that flushed out, we saw everyone want to move. They wanted to get away from everything that crashed, which was houses and falling stock prices, and they all moved into metals as the safe haven play. So I believe we're doing something similar. Silver's been trading sideways here for a while. And stocks have been rallying, and now we've got silver moving up. I still think we're going to see silver push potentially a little bit higher, 35, potentially all the way up to about 37. It could push a little bit higher, but in the grand scheme of things, it has really hit its key target. Just looking at this wick high that we had, this brings us right into these highs on the monthly chart here. And so there's a high, another high, another high, a pivot low. So this is a very critical point. It did tag it and it sold off. Again, I think gold and silver have made the easy move is up. Up has been completed. The easy money's done. Now it's like, can it break through these resistance levels? Can it push even higher? And that is a little bit of a stretch. I think if anything, they're probably going to pause and pull back. They might not have a big correction this time around. Maybe we're going to see gold and silver hold up really well while the economy kind of falls apart, if it does fall apart, and then it just keeps going higher. So, we might not see the big pullback in them. They might hold their ground because we do, as you just mentioned, David, a whole bunch of stuff going on with BRICS and currencies and what's going on globally and cryptos. I think we could see potentially precious metals actually hold up a lot better than they did in 2008, but I don't think they're going to skyrocket and take off here, even though there's a lot of uncertainty. Once selling hits the market and investors become scared, there's forced liquidation because of margin calls, because everybody always owns more than they can afford and they're always using borrowed money. But they also just get scared and they don't know what to do. And eventually people hit breaking points where they're just like, just sell everything, put me in cash. And so it will pull stuff down. So silver is the same scenario as gold. Not a whole lot of upside at the moment. I think in the future, late next year, potentially, or whenever the market resets, I think silver will be like $80, $100 an ounce going forward, and it'll blast through the previous highs that we saw back in 2011. But right now, it's made its run up, and now it's taking a pause and breather, and we just need to see how it's going to shake out here. And we're going to go into a multi-year run where miners will be like way undervalued because they'll be beat up again, and they're going to have those hundreds of percent returns. Some of them will have thousands of percent return. It's one of those life-changing opportunities. People have been waiting for like the next gold bug rally to happen since 2011 peak. And we're not there yet. I think we're still, months and months, if not a year or so away. But when it does come, this will be the opportunity. This only happens a few times in your lifetime. If you're lucky, you catch one or two of them. Simply because most people don't learn about them until it's pretty much one of them's almost over, and then they've got it on their radar, and then they wait a decade or two for the next one. So anyways, there's lots of opportunity in the precious metal space. It's just, I don't think the big opportunity is right now.
Physical gold is widely considered a safe haven asset. As inflation erodes the purchasing power of the dollar and drives up prices, gold tends to appreciate, making it an appealing investment for those seeking protection from market downturns. According to the report, gold has outperformed silver in 11 of the past 17 years. The significant fluctuations in silver's performance, on the other hand, make it a more volatile option for long-term investors, as it can experience sharp swings in value compared to the more stable growth of gold. Do you think precious metals will be able to maintain their value if the global economy faces a serious downturn, or will they experience a sharp correction along with other assets? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up and don't forget to subscribe to stay informed. Thank you for joining us on this journey.